There's no doubt that over the last 2 to 3 decades, we have seen power, specifically economic power, shifting from west to east. Now, this is very true also in the gold market. And until about 2 years ago, the gold market was basically controlled in the west. What we had was the bullion bank situation where out of London and out of New York, the gold price was pretty much set in Western hands. Now, in the last 2 years, this has changed dramatically, and we now have gold being priced out of China, which has a completely different gold market than we do in the West. Now, up until 2 years ago, the correlation that many traders used for gold was the relationship between gold and the 10-year TIPS, the Treasury Inflation Protected Security. So when the TIPS real yield went up, the price of gold went down because investors could get a higher real rate or a higher nominal rate with U.S. Treasuries compared to gold that don't pay any interest. However, this relationship changed where gold went up while the real yield on U.S. Treasuries went up, and this correlation completely disappeared. What happened was the correlation is now with Chinese bonds. So what happens in the gold market is correlated to what's happening in the Chinese bond market. So right now, it's clear that China is the driver of the gold price. And one of the adages is gold goes from weak hands to strong hands. And this appears to be happening right now in the gold market. And this wasn't by government fiat or by laws or rules. This just happened through market forces. So what's happening now in China? China is going through a real estate crisis where they've been forced to cut interest rates and recently print lots of money to help their real estate market, both commercial and residential. So as a result, gold has been going up dramatically because the interest rates that Chinese get on their bonds is dropping. So it's making gold more and more attractive. You build that into the fact that China is desperately selling U.S. Treasuries right now to get out of U.S. reserves in their central bank, because when you're at war with a country, the last thing you want to do is hold their bonds because they can cancel those bonds and default on them. So China has been selling U.S. Treasuries and picking up gold. So we have both the central bank in China buying gold and individual citizens. In fact, Chinese citizens can buy gold directly at their bank. So with the recent huge run up in gold, we've determined that it has been buying in China that's doing it. And this trend may continue because Chinese investors who traditionally invested in real estate aren't going there now because it's dropping and may just buy gold as the default option. So this is a major, major change in what's happening in the gold market. As a result, we expect gold to continue to go higher, largely because it's being priced in China as opposed to London or North America. As well, if you build Bitcoin into this, Bitcoin has been rocketing up when capital outflows from China are the strongest. So it appears that Bitcoin is doing quite well because as interest rates come down, many Chinese businesses and individuals try to get their money out of China. And Bitcoin, no matter what anybody says, is still one of the best money laundering vehicles around. So when Bitcoin's doing well, it's likely because money's trying to leave China and get into other assets because there's still not the confidence in China that there is in the West as far as property and security.